Well, welcome back to Finance Uncut. Today, I'm wearing the End the Fed cap, and we're going to have a look at the silver bull market, which I believe is just beginning. So in this video, we're going to have a look at this article from goldsilver.com written by Jeff Clark, the 5 realities about silver and what they signal is ahead. Reality number 1, corrections are normal, and our friend. Most silver investors know the price is volatile. It's a tiny market, so a small amount of capital can have a big impact on the price. That volatility includes corrections, of course, and putting them to a chart shows that even during bull markets, corrections abound. So in this chart, you can see the corrections of 5% or greater since January last year. So even though silver has had a gain of 69%, there's actually been 16 corrections of 5% or more during that period. And then when we look at this chart from January 1979 to January 1980, which was silver's biggest run, there was 13 corrections of 6.5% or greater during that period. So corrections are normal. In bull markets, they are buying opportunities. In fact, this volatility is why we'll earn more on silver than gold. Reality number 2, silver has always outperformed gold in bull markets. Silver's greater volatility means it has historically outperformed gold in bull markets. Here's the 5 major bull markets in gold and silver, including the current one, and you can see that silver has outperformed gold in each of those bull markets. So before the bull market is over, history says that silver is set to gain more than gold. Reality number 3, prices spike suddenly and violently. With little warning, history shows the silver price can ignite and surge like a rocket. Those spikes usually aren't small, though they are typically short-lived. Here's every silver spike since the mid-70s. What you might want to do is just pause the video here so you can have a look at, in detail, all the different time periods and the lengths of spikes and how long they lasted for. So when we look at that, on average, when silver spikes, the price rises about 150% and over a 7-month period. There's an important point about how suddenly these spikes occur. You must be invested before they kick in. You might have to wait for it to ignite, but silver's history over the past 50 years provides a very clear message. Another spike in the silver price is coming. Reality number 4, current bull market is just getting started, and that's the title of this video. Some investors lament that the price has been stagnant and weak since its peak last August, but this behavior is actually historically normal and does not mean it won't explode again in the near future. Here is silver's biggest bull market from 76 to 1980, along with the current one. Notice how dormant the silver price was for the first 3 years of that bull market too, before the mania kicked in. So when we look at this chart, if we go back to January last year, take the silver price at, say, $17, and this market gained, if it was to copy the bull market from 76 to 80, which gained 1,200%, if we take $17 in this current bull market as a starting point, then we're looking at $200 silver. It's basic math there. So if this does replicate that, then we're looking around $200 silver. Yet it still might be another couple of years away. So you can see that bull market took over 3 years, nearly 4 years to, took 4 years to go from the bottom to the top there. So, $200 silver, I think it's absolutely possible. I think $100 silver is very possible. And somebody else who thinks it's $100 silver is very possible is Keith Neumeyer. Let's have a look.
Let's talk about your triple-digit silver call. Now, you've been on the show in the past before talking about this longer-term outlook. And let's break down the fundamentals here and talk to us about how the market could get there. Let's start with the industrial component, and before we move on to the investment demand component, silver is in a unique position where you've got both components to consider. So what are some of the industrial applications today that you're looking out for that could potentially drive up demand?
Well, everyone that's listening to this podcast or this interview knows, my spiel and my bullish comments regarding the metal. I look at silver as a strategic metal, not so much as a precious metal, despite the fact it is precious. Going to the precious story for a second. In 2020, for every 1 ounce of gold mined worldwide, there was only 7 ounces of silver mined, which is a pretty shocking number considering we're trading at something in the order of 70 to 1 in the financial markets. So that's just that. Now, on the pure demand side, when it comes to whether it's the Green Deal or whether it's just the electrification of the planet or what have you, you look at copper prices, you look at commodities. Silver is really the only commodity that's not really reaching its highs that it has reached now on 2 separate occasions back in 1980 and in 2011. I think we're going to see that high breached in this cycle. And when it does, it's going to wake up the market. And that's what I think. Once it breaks through the $50 level, I think that it's going to get up to the $100 level pretty quickly. It might bounce around 70 or 80. Who knows? But I think those are the kinds of numbers. Copper broke through $10,000 a pound yesterday, and oil's on its way back to $100 a barrel, and we're getting into a pretty inflationary time. And also, you add the actual supply deficits on top of that with silver, you've got a perfect storm. Just in the making, in my opinion.
So let me pause the video there for a second. I'm going to put a link in the description of this video below, and I strongly recommend you all watch it because Keith Neumeyer is about to respectfully have a bit of a crack at Kitco and one of their articles referencing the Silver Institute supply-demand data and report where he basically calls it BS. So I'll put a link in the description below. Much watched video, this one. Keith really, just dismisses some of the BS that's being reported in the silver market. So back to the article. The silver price gained over 1,200% in that bull market, most of which occurred in the final year. Our current bull market is so far exhibiting similar behavior. And if Mike Maloney is right about a monetary crisis, then we are likely to see similar gains over the next few years, if not greater. And it's not just Mike. Everybody is now talking about this. Nouriel Roubini, just about every Austrian economist. You've got the Bond King, the real Bond King, not the self-appointed Bond King. So I'm talking Jeff Gunlock. A lot of them are. Reality number 5, it's not just about price. As a thought exercise, what if I told you the silver price was going to peak at $85 an ounce? Too low, right? But what if I told you that $85 you could buy a house with just 3 mint cases of silver eagles or maple leafs or kangaroos here in Australia? That's exactly what silver investors were able to do in January 1980. Now, I get frustrated with this. So a lot of people look at, I guess, all assets and measure it in dollars, measure it in fiat currency. And luckily I was educated before, I guess I was brainwashed, where I was educated to think of gold and silver in terms of priced in other assets, real estate, stocks, you name it. And I've shared the story before that when I started investing in silver back in 08, 09, rode that wave up and started exiting in the $40 to $50 range in 2011, I then, and one of the reasons why I said I did that was because a gentleman came to my office, just cold called, knocked on my door, came in and started talking about US property, albeit it was in Detroit. But the numbers that he was showing me on these properties were exceptional, and it definitely got me interested, although I had my doubts because I knew a bit about Detroit. But that led me talking to some colleagues who had invested in US real estate before me, and one thing led to another, and we found great markets where I've personally invested in Phoenix, in Atlanta, Memphis, Orlando, Alabama. So there's been predominantly down south, and I was able to buy really, really cheap property. In fact, one property I bought was for $29,500 in Atlanta. Actually, that was my first one. It was a townhome, 3-bedroom, 2-bathroom townhome in Atlanta, and I bought it for $29,500. So what I did was I sold my silver at quite high prices. I sold it in multiple tranches, and I was able to buy 6 investment properties for cash. No debt. I bought 6 investment properties, cash flow real estate, probably averaging around $900 a month in rental income. So that's worked well, and that's exactly what I'm doing in this trade once again. So I'm heavily invested in gold and silver, in the physical gold and silver. I'm heavily invested in gold and silver miners and explorers as well, which I'll come to. But I don't look at it as in, when it hits $50, I'm going to sell silver. Or if it hits $100, I'm going to sell silver. I only sell when I've got something good to transfer my gold and silver into. And so that's the trade that I'm playing out once again. I've done it before, and I believe I'll be able to do it again. So at the peak of the market, silver investors could buy an average price home in the US with just 1,464 ounces. Since silver is money, it's what you can buy with it that separates this hard asset from most other investments. There's another advantage. When ratios like this, one reach historic lows. Regardless of what the silver price may be at the time, it may be time to consider exiting. No, I don't think this ratio bottoms at $85 silver. There's far too much currency abuse for it to peak at that level. I agree. But instead of focusing on the price, look at what silver can buy you. And same with gold, to determine its value and potentially when to exit. I just so agree with this. I so agree with this, folks. So if you're watching this video and you're simply just wanting to, buy gold or silver to, I don't know, like Bitcoin has done and get rich quick and, it's going to go up and all this sort of stuff. That's not why I do it. Yeah, I do it, one, to hedge against inflation, against currency abuse, as we just saw there. But also I do it because I do it in cycles. And Mike Maloney's got a video about wealth cycles, and it's so true, and it works. Now, you don't time it perfectly, but you don't need to do extremely well. And so I might do a video soon about wealth cycles if you're interested. So these 5 realities from history are important for investors to understand. Silver has numerous corrections even in bull markets, always outperforms gold, spikes suddenly and violently. It's gearing up for the next big spike, and will someday buy us a house with a modest number of ounces. So given the nature of silver's DNA, the message to us investors is very clear. Prepare now for the next big run. And as I said, I'm very heavily invested in that gold and silver miner and explorer space. One of the reasons is because I'm bullish the underlying metal, and usually if you pick the right miners and especially explorers, you get tremendous leverage on that on the underlying price of the metal. So very heavily invested in this space, and we're seeing gold miners increasing profits. In fact, when we have a look at the number of gold and silver miners producing free cash flow, it's the highest it's ever been. 73% of miners now with positive free cash flow annually. And as that underlying metal continues to go up in terms of the dollar price, I believe that we'll see even more and more miners producing free cash flow. And yeah, I do this for the leverage space, obviously, to get that leverage. And I've shared in other videos how much leverage I have made just in the last 12 months alone on some of my gold and silver miners and explorers. In fact, I'm sitting on a very exciting silver explorer at the moment, which has got about $4 billion in silver deposits. I am expecting the dollar price of silver to increase over the coming years. They're expecting to begin production late 2022 at the best, more likely 2023. And with that $4 billion worth of silver deposits in today's dollars by 2023, I think it's going to be far, far higher. And I can tell you, I've bought this Silver Explorer at 5.3, 5.6, 5.7, 5.8 cents, obviously in multiple tranches there. Its current share price is double that, but it's still an Explorer, still cheap. A lot of people don't like playing in this space, but I've had some success before. Another stock, Chalice, I bought for 17 cents early last year. I sold it already about at $4, just over $4. Look, it has moved forward. Last I looked at it a few weeks back, it was around the $6 mark, so I've got no idea where it is today. But I was happy to exit that position so that I can move into use that increase and put it into other positions like this Silver Explorer that I've recently bought over the last few months, and am very bullish on. I use the example of Northern Star and Saracen. 10 years ago, Northern Star was 5 cents. I think its peak share price is around $16, $17. Saracen, 5-6 years ago was 5 cents. I think its peak price is around $7. So there's a lot of that leverage upside play in this gold silver miner space, and so I like it. I like the underlying metal. I think everything just points to tailwinds for the metal, and I think getting the right silver miners, gold and silver miners and explorers, also a tailwind. And I think with the inflation that we're seeing now and expecting, I think it's just so important. I think it's so severely undervalued, and it's so important to get exposure as soon as possible if you don't. But that's not investment advice. This is just what I'm doing. You make your own decisions what you want to do. Anyway, guys, if you like this video, please hit that like button. I'd love to see your thoughts in the comments below. If you haven't yet subscribed, do that. Hit the notification bell. Take care, everyone, and I'll see you again on another episode of Finance Uncut.